The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, I wanted to start the show today with one of the charts that John Logan was talking about, and that's the DAX, because you'll notice the triple bottom that is in the DAX. That's when the market started to go up last night, and it was really interesting because what we did in the DAX was take out the low of the 19th by about 1 point, and then it, of course, had a huge rally, as you can see from this chart, and that's what started the S&P rallying. But there's something even more important than that I think is important anyway, and that is that the NASDAQ made a 38% retracement of that move from the 19th up until yesterday, and we backed off just very slightly. And of course, it's turned around and starting to go higher, which suggests that it looks like this market does want to go higher. It's certainly not going to go lower until we take out that low of the 19th. That would be my opinion. That's the 2022 level in the S&P and 17,000 in the Dow. Today is a busy day here in Copenhagen. By the way, I don't know if you folks know this or not, but this is a very famous place from a Walt Disney standpoint, because this is where Walt Disney got his inspiration for Disneyland, from Tivoli Gardens. It's an amusement park that's over 100 years old with all the, the rides and everything. But the most important one, of course, is It's a Small World, and also the Pirates of the Caribbean, almost perfectly duplicated in Anaheim in 1955 when they opened in July, which I had hitchhiked from Terre Haute, Indiana, all the way to Anaheim with two of my buddies, and we were gone about 5.5 6 weeks, I believe. I think I had $60 in my pocket, and when I got back, I still had $12. And it was really exciting. In fact, it was a very exciting time. Not for my mom. My mom was very angry with me, but I did get back okay. But it was a different time. I would never let a kid do that these days. No, not a chance. Oh dear, I was going to, you folks don't get to travel very much, some of you guys, so I have to tell you an interesting thing that happened. I mean, it has nothing to do with trading, and Tom was probably going to kick me off the air for this, but I'm standing in the lobby last night getting ready to go to a meeting where I was on a radio show for the Denmark Financial Channel, and believe it or not, some people actually called in who were TFNN listeners, one in Denmark and one in Norway, and I really thought that was really cool. One of them asked me about astrology. The other one asked me a little bit about, how I got started into trading, that type of thing. But I thought it was really cool that, TFNN is stretching everywhere. So that's really good. But I'm standing in the lobby, okay, and I'm talking to this guy from Boston, and this absolute drop-dead girl walks in. I mean, she's she was a flat-out 10. Every man in the place was turning around looking at him, and I'm talking to this guy from Boston, and the concierge over there laughing like crazy. And I walked over to him and I said, "Don't tell me why you're laughing." And he said, "Yep, that's right." And it wasn't a girl, boys and girls. It was a man that had now been turned into a girl. I guess she'll be using the restrooms in North Carolina. So John Logan, if you're listening and you run into her, please tell her everybody in Denmark thought she was rather cool. But it sort of shook up the old boy from Tucson, that's for sure. I was totally shocked. Not that I hadn't seen that stuff before, but to see it in Denmark, right out of the blue like that was really amazing. And speaking of the blue, you know what time the daybreak is here? 3:30 in the morning. Nighttime is around 10:15 and at 3:30. So you only got nighttime for about 6.5 hours this time of the year. So it's very interesting. So remember what Larry Williams always said: in the land of the blind, The one-eyed man is king, so keep both eyes open. Tonight I do live trading in a group of about 45 folks today, so that'll be sort of fun, but we'll be watching that very closely. All right, enough with the banter back and forth, but the main thing that we want to look at today are the metals, precious metals, gold and silver. I've posted the chart for the silver into the room. And also I'm going to do the one for gold. We already know the gold. We've seen it several times, but the silver is the interesting one. It's holding up much better than the gold. It has not quite made the 61% retracement at the 1610 level. We got down to 1620, and that's also a 20-man line going back to all the way to November. It's also a perfect 61% retracement off of the March and February lows, a double bottom there. And it's a perfect 50% retracement off of the low from December. So if you want to buy silver, today's the day, and this is the price. And I don't know if it's going to work or not, but boy, it's sure got all the things that you like with pattern recognition. And, they don't always work, as we know, but this is one that really sets up quite nicely. Now, tomorrow I will not be able to be on the air because I will be traveling back to the United Kingdom, also known as the place of the Brexit, London, and I'll be there for a week. So I will miss, my only show that I'm going to miss is the one tomorrow. So make sure that the folks at TFNN, you remind them, because I've already forgot to remind them, and I wrote a note to do that. So we'll get that taken care of. Anyway, we have some major ABCDs also occurring in the gold. The number that John Logan talked about was spot on the 1238 area. It's a ABCD, all the retracements that you can look at, it's just right on the money. Whether that holds or not, I don't know, but it's certainly spot on where it should hold. That's the main thing. It's much better to buy it here at 1238 than it was at 1305. And I still think long term, the thing looks okay. I really think long term it's all right, but we could still get down to that 1190 level, which is also a very important spot in the gold. And also the level in silver would be at 1550. So at this level, you don't have to risk much at all. I would say $5 at the most of anything that I would be looking at, with any of those things. So that's the main thing. The key today, besides the metals, of course, as we have the crude oil is rallying up to a 78% retracement up here, right near this 49 level. That's in a very, very important spot. We also have a small Gartley sell signal in the IBB, but that's the only one. The others are the NASDAQ and the Dow Jones and the S&P are now taking out the highs of yesterday. And so unless it reverses from these levels around 2060 in the S&P, which is certainly possible because that's a pretty important resistance area, the bias has to be to the upside, mainly because of that 382 retracement in the NASDAQ overnight, and the fact that we held all these Fibonacci numbers in the foreign markets, the the DAX, the Hang Seng, and the Nikkei all held major Fib points. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've posted the chart of the S&P. As you can see, the swings that are there that led us down to that bottom at 2020, which was the full moon and also Mercury going into direct motion. And now you'll notice that we're going up to that downtrend line that also happens to be a Fibonacci number around this 2060 to 2062. So pay very close attention to that, because that's going to be a very interesting spot. All this market needs to get going is a really strong move, up 200 or something in the Dow. You could get it going, even higher. So, and believe me, I am bearish long term, but short term, after the action we had on Thursday with all those numbers being hit, you had to be, totally oblivious to that, or, you were just giving money away. So you don't want to mess with that. The focus today, I believe, is gold and silver, and also the crude oil. Crude oil made that 786 retracement. Whether it goes higher or not, I'm not sure, but these are the numbers that I'm looking at. And remember, I don't listen to the news at all. In fact, on the radio show here in Denmark yesterday, they were able to have some, there were actually 3 callers and a couple of emails coming in. And they asked me about the fundamentals. And I frankly didn't, I was very honest about it, because I had, no other way to do it, because I couldn't even bluff it. Because I believe you have one person coming on and saying it's bullish, that's Goldman Sachs, and you have JP Morgan coming on and saying it's bearish. I mean, you have to figure out what it is. So the only thing that really matters is if prices are going up, there's more buyers. If prices are going up, there's more sellers. That's the bottom line. I mean, there's no other way to look at it, in my opinion. And that's the easy way to do it, at least from a technical perspective. So we'll see what's happening. Okay, let's move on to another one that looks real interesting here. And I know Mr. Z will like this one, our good friend from the city of brotherly love. This is a soybean chart going back almost a year. As you can see, we made the bottom last August. And during the 24th, when we were having that big sell-off in the stock market. And now what we're having is our third ABCD correction. We had one in November, we had one in January, and we've got another one coming right now. And it's going to be coming at a 78% retracement of the yearly lows from January. And it's also coming in at a 50% retracement of the low from November. And it's coming in at a 38% retracement of the low from August 24th, and that comes in at around 30.40 per pound in soybean oil. Now, soybean oil is 20% of the pod, of the 3-bean pod that we get with soybeans. So the meal, which has been basically parabolic, as everyone that follows Mr. Z and some of the other folks in TFNN, you could see a big move down in meal and a big move up in oil just by that spread turning around. And so just keep in mind, trade the pattern. Don't worry about the fundamental stuff. You know, if we need some fundamental stuff, we'll ask Rich Anderson about it. But if you look at the pattern, that's a perfect ABCD pattern in price and time. The number of days down in the AB leg are equal to the number of legs down in the CD leg. So pay close attention to the soybean oil at this 30.40 level based in July oil. That's that's the main one. July oil has a great deal of memories to this old cowboy because that's the one that dug me out of my hole from my big goof-off in 1974 when I gave all of my money back plus $2,800. But then a year and a half later, this July soybean oil bailed me out big time. So keep an eye on July oil. It's going to be very interesting. And we also have the same thing pretty much happening in the soybeans too. And it's really going to be interesting what really happens to this because it's going to be showing what's moving on quite a bit. So we got gold breaking down now below that key level of 1238. That's certainly not a good sign, but the silver still has not reached our level of 1210. So, excuse me, of 1610. I would certainly, I want to see how the market acts, as we get to that level. So we'll see what happens from that level. We're having some really interesting moves in the currencies with the euro breaking down. That's making the dollar look stronger, which it is stronger. We're heading down towards that, we believe that 110, 109 level at least in the euro. And that'll be another interesting one to pay attention to. And we'll follow that as we go through. Now, I won't be here tomorrow. I want to remind you folks of that again because of the fact that I do have a travel date tomorrow. And it's really amazing when you go through security here, folks. It's major security. They do everything, but they just do just about everything other than strip search you, and it's a real interesting situation. And not only that, they hardly ever check your passport. They check everything about you except your passport. So that's sort of strange, but that's the rules that you have to live by. So nothing else you can do but follow the rules as you go through country to country. Okay, we had a question from someone on email that I wanted to address, and that is the status of the grain markets. And we're having a breakdown in the wheat market, folks. It's going below that really key level at the 460 a barrel. I'm going to post that up. We're almost down. We can't go below 455 in the wheat. Otherwise, that's going to set up, new lows in the market. And we're not very far from that right now. So we are having a sell-off in the beans a little bit and quite a bit in the meal and nothing in corn. Corn is still holding up relatively well. So that's the main thing to be watching, very, very closely. So that's what we're watching here now. Early this morning, and we'll move on to some of these other things. By the way, I did get some information from Norm Winsky, and he had some very interesting, chart formations that were suggesting that we're probably breaking out to the upside in the stocks, and it certainly looks like that from the early morning part of the thing today, and we'll see if it's going to hold. Okay, we want to bring out one other question here, and I wanted to show you where we were with the gold, and now we've broken down. I want to just give you an idea where that 1238 came in. We've showed this before, but we'll show it again. I haven't updated it for a day. So the actual low is right now around 1236, was almost is at the 1.618 level that comes in at the 1230. 4 level. So below that, and not only that, boys and girls, but 1234 is going to bring us down $70 from the high. And remember, the harmonic number in gold is 34. You take 34 times 2, that's 68. Now, this is not the time to be shorting gold. It might not be the time to buy it, I don't think, but boy, I certainly can't short it here. But we'll keep a very close eye on that and see what transpires. The only thing that happened exciting so far in crude oil today is we went up to the 786 at that 48.60 level and backed off a little bit, but it's so small that it's really not even mentionable. I don't believe we're still in major sell patterns in gasoline and also in the heating oil. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, looking good, Billy Ray. We are back here at TFNN, and we have a question from one of our folks in the den. If you'll give me a second, I will pull up the chart and try to answer it. And if I can't, I will bluff it the best way that I can. And the question, of course, is about the euro. And I wanted to bring this up to let you folks see what we talked about this, of course, earlier in the week, but we want to bring the chart up to take a look at it because we were just talking about the euro at this 111 area, And as you can see from the daily charts, we're already almost to this level of the 1.27 and 61% retracement from the March lows. This is going to be a very important spot here in the euro and the US dollar when the euro hits 111, run around 111.30, 111.20. That would be the area where it should have some pretty good support. Now remember, now the euro is down 2.5 weeks from the high that we made back on the 2nd of May. So we're down, almost 3. Well, it is 3 weeks. You surely learn how to count. I was counting the days and not the weeks, but it's 3 weeks down, and we're coming into some real serious support here in the euro around this 111.30 area. And remember, the euro is 53% of the U.S. dollar index. So that's a very, very important thing to keep in mind. And, that's mainly what we're going to do. Now, next week, we're going to have Dale Pinkert come on. He's an old-time trader from Chicago, one of the old boys. And he will be our guest next week after the holiday. And I will be back in the good old USA, and we'll have a lot of fun talking to him. He's certainly a talented folks, and he is he's had a lot of guests on his show, which is Martin Armstrong and Harry Dent and a whole bunch of other people that he knows. And he'll have a lot of interesting things. Anytime you get someone that's got a lot of experience, it's probably worth listening to. And maybe not, but with Dale's case, I know it's okay. So that's the main thing. Some of the other guests that I'm trying to get on is Ron Rossaway from Denver with his Denver Trading Group. He's the largest group of traders put together, and he has some really good information, and some of his stories that he has are very, very good. And also I'm going to have Bill Meridian back, of course, because that's very, very important. I've had a request, since we're talking about the gold market, I've had a request to post this artificial intelligence forecast that we got from Larry Edelson. One of our dinners was kind enough to send it on to us. And this is, we got this thing in, around the first week of the year. And as you notice, it's been following, quite nicely. And as you can see, we're looking for a bottom here in the gold market somewhere around the end of May, early June. Now, we don't have an updated forecast, so you can't really gain too much of it. And the reason why this is important is because it's been spot on. I mean, it really has. I mean, you can't deny that it's been really on, and we are certainly going down today, at least starting today. And so it'll be interesting to see if it does continue down. Now, it's not going to be making new lows because our old lows back there were at 1070. All we're doing now is we're making another $70 a barrel, $70 an ounce correction from our high at 1306. But remember, the last correction that we had, back in early February, that one was an $85 correction, and then it went out and made new highs. So keep in mind that these things have a tendency to move very, very quickly when they move. But long term, I still think you have to think of gold from the long side, and also silver, because that's a really important thing to follow from my perspective of looking at this. Now we're right up near this resistance that we're looking at here in the S&P. I don't know if it's going to hold or not. It's still early, around this 2060 area. We're 2059 right now, and whether that's going to be anything of any significance, I'm not sure, but nobody else is sure either. All we're doing is we're looking at patterns that may or may not hold up. So that's the key. Is it's all probability, folks. There's nothing else that you can talk about other than that, because that's the thing that really means something. Now, another market that held very well was the last night, which was down, and then it rallied back to close up on the day. I believe it closed up on the day, and that is the Hang Seng. The Hang Seng also went down to a 61% retracement and held the level very well. If you remember, the DAX made a triple bottom, and the Hang Seng made a 61% retracement, and then the Nikkei also made a very shallow retracement. So all of those were sort of telegraphing that the market wanted to go up, but the key was the main thing was in the DAX, the NASDAQ making that 38% retracement. We did not make that 38% retracement with the S&P. It missed it by quite a bit. We should have got down to 2043, and I think the lowest we got was 2046 or something like that. So it held extremely well. Well, you know what? It did make 2043. I'll be darned. The S&P made the. That must have been during that 10 minutes I was sleeping. Yeah, the S&P made it too. The number was 2043, and the low was 2041.25. Well, that's another reason why it looks bullish. So we'll see. But we're up to key resistance here. It's got to go barreling through there for it to be really good. That's what it looks like from the cheap seats. That's the understatement of the year. Calling them cheap seats here in Copenhagen, where a Coca-Cola is $5, and you go for a Big Mac, it's going to run you about $12, which is much cheaper than Zurich, where they are $18 for a Big Mac, and that's not the meal, boys and girls. That's just the sandwich. So there's a lot of expensive places in the world, and of course the U.S. is not one of those. So we'll see. We are getting above now the number here that should have held at 2060 in the S&P. So I wouldn't even think about shorting this until we get back below that 2058 level. If in fact we do that, it's better. In fact, I happen to be on the long side on a short-term basis, and I'm wondering if it's going to continue doing it, but we'll watch it, very, very closely. Okay, now the next one that we wanted to talk about, we've talked about the gold and the silver, we've talked about the crude oil market, and we needed to talk about the dollar index because people are talking about the dollar index, and I think this is the chart that you have to keep in mind. This is going back to when we had our fearless leader, Tom O'Brien, talking about, buying the dollar from the long side. As you can see, that was the area where you see thrust in there. That was when Tom was first starting to talk about it, when the dollar index was around 73. And now we've had the second major ABCD correction since 1985 on this long-term monthly chart. That's very, very important, folks, because that means this dollar could get very strong. Why, I don't know. All I know is technically it doesn't look weak. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're taking a look now at the Treasury bond market. As you can see, we had that breakdown, to the 61% retracement down at the 163 level. We rallied up to hit 165 off of that level, and since that time, we've done, very little other than back and fill, and that's usually not a good sign, because usually after you hit these numbers, you have a pretty strong rally, much like we did on the S&P and the NASDAQ and the Dow when we hit 17,000 in the Dow, 17,300. That made the market, move substantially up, and that's what it should be doing. But it's not doing that in the bonds, and that tells us that we might be looking at some really serious correction coming here, going below 163. Because below 163, you're looking at air. I mean, it's really going to have a really rough time below that if it gets below that level. So watch that very, very closely, and we'll see how that ends up today, and then we'll check on it. Now, tomorrow, I've mentioned several times, but I will not be on tomorrow, but I will be on Thursday and Friday, and we'll be able to chat about some of these things that we're seeing today. We'll see how much the market gets above these levels. I had a question from someone in the den. If the 2060 area doesn't hold, which it certainly hasn't, it's trading at 2060.75 right now. The next level to look at is 2065. And all I'm doing is at 2060, I'm looking at the 1.27 expansion. And at 2065, I'm looking at the 1.618 expansion. Of course, above 2065, it's off to the races. There's very little resistance beyond that level. I don't know if the market can make a new high up at the 2134 level. I certainly, it's possible, because markets can outlast any amount of selling that you might think you have. But there is that possibility that you could be looking at something of a nature of a new high. I do not believe that's going to happen, but those are the things that you have to, keep in mind. Most of this stuff is really done by about 50 stocks. You got about 20 stocks in the Dow that move a little bit. You got about 50 of there are 20 of the S&P stocks and 10 or so of the NASDAQ stocks, and that pretty much moves it all. So as long as that stuff is moving, they can run, whoever they is, it can go higher. That's the base. Long term, we've got something that is going to be history making, and that's the tulip bulb. And the tulip bulb, of course, is the quantitative easing of the Federal Reserve. I'd like to show you that chart, because I think it's important that we not forget that we've been in an area where we've had nothing but Federal Reserve intervention, and that is not a good thing. I know it's experimental. Nobody knows what is going to happen. One of the questions yesterday from the radio show here in Denmark was about quantitative easing. And of course, I know less about it than anybody that's listening. All I do is when I look at this chart and see what's happening to money supply, since 2008, when we started quantitative easing, it's been going up on an annual rate of 36% for almost 6 years, and we're continuing to go higher. As our good friend Shane Smolian has pointed out to us several times, because he watches the Fed index, and they're in there buying still. So someone is actually throwing money at the market, and they're doing the same thing in Japan, but with different results. In Japan, the market is going down. So even though the Japan government is buying a lot of stocks, they're not doing too well. Now, I don't know how that could be, but that's what it is. When stocks are going down, there's more sellers. When stocks are going up, there's more buyers. That's the thing that you're watching. But this is the chart that you really want to be aware of, because sometime in the future, maybe long after I'm gone to that big trading place in the sky, I hope it's in the sky, we'll be looking at something that will tell us that, these things look like we're ready to move a lot lower in Treasury bonds, meaning higher interest rates. We've got the Dow now up 172, and the S&P is very close to that 2065 level already, up 18 points. And we've had a huge move in the DAX. It's moved 100 points since the opening. We still got gold is still down $17. And what's interesting is silver is only down 8 cents, and it's not even been able to take out the 1620 level, which is pretty bullish, but it's not being, no one at the gold market is listening to it right now, at least early in the day. Copper has held that 205 level, which Mr. Z pointed out last week, and has held, pretty well. It's trading at, 207 and change. And those are the main ones that we're keeping an eye on, so far. So we've got the Dow up about 170, and then the Nasdaq is very strong. It's approaching its resistance, which is around 4408, and we're 4390 right now, and we'll see what's going to be happening with that, and we'll notice whether that's going to be a really interesting spot for some of these things to see if they have any resistance at all at some of these levels. And that's primarily the main thing that we're looking at here. I don't see anything else that really looks, really is, it's relatively quiet considering we gapped up this much. We'll have to wait and see if it can hold these, this big run that we've had. But really keep an eye on that 2065 level and 4404 in the Nasdaq, because that'll be the real place to see whether we're going to make a move, major breakout. And we certainly could do that, because that was a major cycle bottom that we had on Thursday and Friday, folks. We pointed it out many times. Every single Fibonacci number of all the major markets were hit spot on. That means a lot. I mean, when they're all hit either 618 or 786 all on the same day, when we have a full moon and Mercury going direct, you've had to pay attention to that. So this is what we're looking at. All I know is if we go below that level, Katie bar the door on the downside, because there'll be a draft down there that'll make the winters here in Denmark very mild. And by the way, you folks, I find this very hard to believe, but I've verified it. They only have about 3 or 4 days of snow here. They have some cold weather, but they don't get a lot of wet weather here. Everything's water around you, but it's very, very little water, rain and snow. So it's very unusual. It's a lovely climate, and just very, very nice people, which is really nice. Very, very pleasant and incredibly clean. And they have almost as many bicycles as the people in China. Everybody seems, to ride a bike. I was trying to find a bike, but none of them had motors on it, so I was unable to find the one that I wanted to ride. There were no Harleys at all. I didn't see a motorcycle in the 3 days that I've been here. So that's the main thing. All right, we're hitting 2065 now in the S&P. We're doing it with a really strong wide-ranging bar. So This thing looks like it's very strong in the first 20 minutes of trading, and you certainly don't want to step in here at this level. If you let it hit 2065, and if it's still there half hour later, it hasn't gone much, and you wanted to short it then, yeah, you can take a shot at it then. But until then, the easy one was buying at that 382 last night in the middle of the night. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, I've had a question about what I'm doing over here. I've been fortunate enough to train a whole bunch of folks from Norway, Sweden, and Denmark, and we come here every couple of years to get together and trade together. We're going to be doing that tonight. We have 40 people, and it'll be a lot of fun, I'm sure. That starts in a couple hours, and it'll be. I'll let you know. I'll report on you Thursday when I get back into the UK. But very, very nice people. And they're all doing pretty good, which makes you feel pretty good, to see some of these things, unfold the way we like to see them unfold. Okay, we've had a question about the live cattle market. Unfortunately, I have been too busy doing too many other things. I'll have Rich on when we get back from the holiday, and he'll update us on what's the status of the grain market. And of course, you've got to be careful of these grain markets as we start the June, because that starts our growing season. That's next week. And you remember last year in the grain markets, we had a really strong move of $1.50 a bushel in beans up into July, early July, which is usually the seasonal time of topping. But this year is probably going to be different because we started out so strong with the crop even before it was planted. It took off. So it's going to be interesting what's going on. The meal has been the key thing in the complex, the soybean meal. It's basically had a parabolic move, and it is still up in the air. So we'll wait and see when we get rich on when we come back. The key thing to watch today, of course, is the stocks. We need to get above that 2065 level in the S&P and 4404 in the NASDAQ. Then you'll be off to the races. If we get above 4920 in the crude oil, I believe that was one of John Logan's key levels. That means you're certainly probably going to, go higher, even though it's a big 61% retracement on gasoline, heating oil, and crude oil at these levels. That doesn't mean that it has to stop here. That's the key, to keep in mind. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.